Preparing for a financial analyst at USAA interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to become a financial analyst at USAA? I want to join USAA because its financial decisions directly affect members' financial security, not just quarterly results. My strengths in Excel, financial modeling, and explaining trends would help leaders evaluate performance, pricing, budgets, and investments. I also value the company's mission and culture of service. In this role, I could combine rigorous analysis with practical judgment, ensuring recommendations are accurate, clearly communicated, and aligned with sustainable member outcomes. While answering, connect analytical skills with USAA's member-focused mission, explain your interest in financial services and insurance, and demonstrate how accurate analysis can support disciplined decisions, affordability, risk management, and long-term member value. Question 2. What do you know about USAA's business model? USAA serves military members, veterans, and their families across insurance, banking, investment, and related financial services. Its business model depends on attracting and retaining members, pricing risk appropriately, managing claims and operating costs, and investing assets responsibly. The member focus creates a long-term orientation, but it still requires strong profitability and capital discipline. I would analyze both financial performance and service outcomes because each supports sustainable member value. Make sure to cover USAA's member-owned orientation, insurance, banking, investment and related services, military community focus, revenue drivers, risk exposure, and how the model differs from a purely shareholder-driven financial institution. Question 3. Walk me through the 3 financial statements and how they connect. The income statement shows revenue, expenses, and profit over a period. Net income increases retained earnings on the balance sheet, while assets and liabilities reflect the company's financial position. The cash flow statement reconciles beginning and ending cash through operating, investing, and financing activities. For example, a profitable sale may increase revenue and receivables before cash is collected. That timing difference explains why accounting earnings and cash generation can diverge. In your answer, explain the income statement, balance sheet, and cash flow statement, describe retained earnings and cash reconciliation, and include how an operating event flows through all 3 statements. Question 4. How would you analyze a monthly budget to actual variance at USAA? I would first quantify the variance, compare it with materiality thresholds, and separate timing or one-time effects from recurring drivers. Then I would decompose it into volume, rate, mix, productivity, and pricing impacts, using supporting operational data. I would discuss the result with the budget owner, validate assumptions, and determine whether the forecast needs updating. Finally, I would present the cause, financial impact, risk, and recommended action concisely. Be sure to mention materiality, favorable versus unfavorable classification, volume and rate drivers, timing, one-time items, root cause investigation, stakeholder discussion, forecast impact, and a clear recommendation rather than merely reporting the variance. Question 5. What financial metrics would you monitor for a USAA insurance business? I would monitor written and earned premium growth, retention, claims frequency and severity, loss ratio, expense ratio, and combined ratio. A combined ratio below 100% generally indicates underwriting profit, although investment income also matters. I would review reserve development, catastrophe results, capital adequacy, and customer trends alongside those ratios. For example, rapid premium growth with worsening loss severity could signal underpricing rather than healthy expansion. Focus on loss ratio, expense ratio, combined ratio, premium growth, retention, claims frequency and severity, reserve development, catastrophe exposure, capital strength, and how analysts interpret metrics together instead of in isolation. Question 6. Explain the difference between the loss ratio and combined ratio. The loss ratio measures incurred claims and related loss adjustment expenses relative to earned premiums. The combined ratio adds underwriting expenses, such as acquisition and administrative costs, to that loss ratio. Therefore, it provides a broader view of underwriting profitability. Below 100% generally means underwriting profit. I would still examine catastrophe effects, reserve development, policy mix, and investment income, because a single ratio may not explain the underlying economics. In your answer, define each ratio, explain the expenses included, discuss underwriting profitability, identify limitations, and show how investment income, reserve changes, and catastrophe experience influence interpretation. Question 7. How do insurance reserves affect financial reporting and analysis? Insurance reserves represent the estimated cost of claims that have occurred but are not yet fully paid. They include reported claims and incurred but not reported losses, making them a significant liability and source of estimation risk. Changes in reserves affect current earnings and future cash needs. I would analyze reserve development over time, compare assumptions with actual claims emergence, and investigate adverse development because it can indicate pricing or reserving weaknesses. Make sure to cover incurred claims, reported and incurred but not reported losses, actuarial estimates, reserve development, income statement and balance sheet effects, uncertainty, and the importance of comparing estimates with actual emergence. Question 8. How would you evaluate whether an insurance product is priced profitably? I would estimate expected claim frequency and severity, add acquisition, servicing, overhead, reinsurance, and capital costs, then compare the total economic cost with expected premium. I would segment the analysis by customer and risk characteristics rather than relying on averages. Sensitivity testing would show the effect of inflation, catastrophe frequency, or retention changes. After launch, I would compare actual loss and retention experience with assumptions and recommend pricing adjustments when necessary. Discuss expected loss costs, expenses, premiums, risk characteristics, reinsurance, capital costs, investment income, sensitivity analysis, competitive conditions, and monitoring actual experience after launch. Question 9. What is asset-liability management, and why is it important at USAA? Asset-liability management coordinates investment assets with the timing, duration, liquidity, and risk profile of expected obligations. For an insurer, claims may emerge under uncertain conditions, so the portfolio must generate income without creating excessive interest rate or liquidity risk. I would assess duration gaps, cash flow matching, credit quality, and stress scenarios. The objective is not simply maximizing yield. It is preserving solvency and reliably meeting member obligations. While answering, explain matching assets with liability duration and cash flows, interest rate risk, liquidity, reinvestment risk, insurance obligations, stress testing, and the balance between return generation and capital protection. Question 10. How would rising interest rates affect USAA's financial performance? Rising rates generally reduce the market value of existing fixed income securities, particularly longer duration bonds, which can affect investment valuations and capital. Over time, however, maturing assets can be reinvested at higher yields, increasing investment income. Borrowing costs may also rise, while customer behavior and product demand can change. I would separate immediate mark-to-market effects from long-term earnings benefits and analyze duration, liquidity, and scenario sensitivities. Be sure to mention bond valuation, unrealized gains and losses, reinvestment income, borrowing costs, policyholder behavior, duration, capital impacts, and the difference between short-term accounting effects and long-term economics. Question 11. What is the difference between revenue recognition and cash collection? Revenue recognition records economic activity when it is earned under accounting rules, while cash collection occurs when the customer actually pays. In insurance, written premium may be recognized over the coverage period as earned premium, creating receivables or unearned premium balances. This timing difference means revenue can rise before cash arrives. I would therefore review receivables, deferred balances, operating cash flow, and collection trends rather than treating revenue as cash. Focus on accrual accounting, earned versus written premiums, receivables, timing differences, deferred revenue, cash flow implications, and why analysts should reconcile reported earnings with actual cash generation. Question 12. Describe a financial model you have built or would build for USAA. I would build a driver-based forecast linking members, policies, premium, claims, expenses, investment income, and capital requirements. Historical data would establish trends, while assumptions would be separated clearly from formulas. I would include base, upside, and downside scenarios, plus checks for balance, missing inputs, and unusual movements. The model's value would be measured by whether leaders can understand the drivers, test decisions, and update the forecast efficiently. In your answer, explain model purpose, assumptions, historical inputs, drivers, formulas, scenarios, validation, documentation, controls, and how outputs would support a specific management decision. Question 13. How do you ensure accuracy when working with large financial datasets? I start by confirming the source, reporting period, definitions, and expected population. I reconcile record counts and control totals to the general ledger or trusted reporting source, then test for duplicates, missing values, unusual outliers, and inconsistent classifications. I maintain documented transformations and version-controlled files. Before presenting results, I perform reasonableness checks against prior periods and independently review key formulas so errors are caught before they influence decisions. Mention source validation, reconciliations, control totals, data definitions, duplicate and missing value checks, reasonableness testing, version control, documentation, and independent review before distributing conclusions. Question 14. Which Excel functions and tools do you use most often? I regularly use pivot tables, SUMIFs, XLOOKUP, index match, IFERROR, date functions, conditional formatting, and charts. For larger recurring files, I use Power Query to standardize and refresh data more reliably. I also build sensitivity tables for assumptions and clearly label inputs, calculations, and outputs. My priority is a model that another analyst can audit and update, not merely a workbook that produces a number. Be sure to cover pivot tables, XLOOKUP or index match, SUMIFs, IFERROR, date functions, charts, Power Query, sensitivity tables, data validation, and how you use Excel to improve analysis rather than create opaque workbooks. Question 15. Tell me about a time you explained a complex financial analysis to a non-finance stakeholder. In a previous project, a business partner needed to understand why expenses exceeded budget. Instead of presenting accounting categories, I translated the variance into hiring timing, contractor rates, and project volume. I used a simple bridge chart and highlighted the two controllable drivers. After confirming their questions, we agreed on a revised forecast and monthly tracking process. The experience taught me that strong analysis only creates value when stakeholders can act on it. Focus on audience assessment, simplifying technical language, using business drivers and visuals, confirming understanding, answering questions, and showing how the explanation led to a decision or changed behavior. Question 16. Describe a time you found an error in a financial report. While reviewing a monthly report, I noticed one expense category had moved far more than the underlying activity suggested. I traced the variance to a duplicated data load, confirmed it against the source system, and quantified the impact. I informed the owner with evidence rather than assigning blame, corrected the report, and added a duplicate record check to the process. That approach protected accuracy while improving the control environment. In your answer, explain how you identified the issue, verified the root cause, assessed financial impact, communicated professionally, corrected the report, and implemented a control to reduce recurrence. Question 17. How would you prioritize competing requests from senior stakeholders? I would clarify each request's decision date, business impact, risk, required scope, and dependencies. Items affecting members, regulatory obligations, financial reporting, or executive decisions would usually receive priority. I would communicate trade-offs early, propose realistic delivery stages, and confirm whether a focused preliminary answer is sufficient. Throughout, I would protect critical review and validation steps, because delivering an inaccurate analysis quickly can create greater risk than a transparent delay. Mention urgency, business impact, regulatory or member implications, dependencies, effort, deadline negotiation, transparent communication, and maintaining accuracy when several important analyses arrive simultaneously. Question 18. What would you do if your analysis contradicted a senior manager's expectation? I would first recheck the data, definitions, formulas, and period comparisons to ensure the result is defensible. Then I would present the conclusion respectfully, show the key evidence, and explain the assumptions driving the difference. I would invite the manager to identify context I may be missing and test alternative scenarios if useful. If the analysis remained valid, I would document it clearly and support the decision with facts rather than simply agreeing. Be sure to mention respectful challenge, verification, transparent assumptions, evidence, alternative explanations, sensitivity analysis, escalation when appropriate, and willingness to revise conclusions when better information emerges. Question 19. How do you approach confidentiality and ethical issues in financial analysis? I treat financial and member information as confidential and use only approved systems, access levels, and sharing channels. I would never adjust assumptions or presentation to produce a preferred outcome without clearly disclosing the change. If I encountered a conflict, control override, or questionable request, I would document the facts and raise the issue through the appropriate manager, compliance, or ethics channel. Trust depends on accuracy, discretion, and consistent judgment. Focus on protecting member and company information, least privilege access, approved systems, accurate reporting, conflicts of interest, escalation channels, documentation, and refusing to manipulate results or bypass controls. Question 20. What would you do in your first 90 days as a financial analyst at USAA? During the first month, I would learn USAA's businesses, member mission, reporting calendar, systems, data definitions, and control requirements. In the second month, I would meet key partners, reproduce important reports, and identify recurring pain points or reconciliation gaps. By the third month, I would deliver a practical improvement, such as automating a manual analysis or strengthening variance commentary. I would seek feedback throughout and build credibility through accuracy, responsiveness, and clear communication. In your answer, cover learning USAA's businesses and member mission, understanding reporting calendars and systems, meeting stakeholders, validating key metrics, delivering early wins, and building credibility through reliable communication. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.